For $1 million of term life insurance coverage for a couple of $100 a month. Call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Did you know that 55% of working Americans would choose a lower-paying job to work under a leader who inspires their brilliance? In today's fast-paced world, resilience isn't just a trait, it's a superpower. If you're feeling overwhelmed by life's pace with hurry and worry, struggling to find a way, discover the secrets with Simon T. Bailey's bestseller, Resilience at Work, How to Coach Yourself into a Thriving Future. Get your copy today on Amazon and unlock your full potential.
Former CIA officer Jason Hansen here. In my line of work, I've seen firsthand how fast the world can change. With rising geopolitical tensions and inflation eating your buying power, it's time to take action. For me, that means gold. And for gold, I exclusively trust Advantage Gold. I urge you to do the same. Call them now at 800-900-8000 for a free gold guide to discover the security that comes with owning precious metals. Again, call 800-900-8000 today.
Paid for by Advantage Gold. Performance may vary. Past performance is not indicative of future results. Always consult your financial and tax professional.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off June here on the Financial Exchange. Chuck, Mike, and Tucker with you. And we got a nice week of economic data. Not really much on the earnings side. The only company of any note is Broadcom reports on Thursday. Even though they only do about $60 billion a year in revenue,
sure,
they are an $800 billion market cap company, and so it does matter to markets what they do. But that's the only major earnings report, unless you're really interested in what Vail Resorts has to tell you about how much you spent on your Epic Pass last year and how much more it's going to cost you next year.
Yeah, I don't care about that much.
No, it's fine. So, anyways, we do have a bunch of economic data, though, and it kicked off this morning with the ISM manufacturing data at 10 a.m., which was not great. This is a series that generally is what economists refer to as mean reverting, because it's a survey that's mostly about sentiment, not about hard data. Hey, do you have more orders than you did last month? Yes means 1, no means 0. Like it's kind of it's touchy-feely in a way that, you know, hey, are you paying more in prices? Well, yeah, I think I am, but they don't ask you like how much more you're paying in prices. Did you hire more people? Yes, no, but it doesn't tell you how many more. So in this way, it tends to be mean reverting simply because if the news improves enough such that a business feels better about its prospects, they'll generally answer these surveys better. Yes, there's some hard data that goes into it, but ultimately it's still kind of a touchy-feely number. And so what we saw in the April reading last month was, hey, tariff, we saw improvement on the tariff front from the Liberation Day announcement, and so ISM manufacturing bounced a little bit. It went up to a reading of 48.7. The consensus here was that we were going to jump to a reading of 49.5. In fact, we saw a little bit of a retrenchment back to 48.5. And so you look at the individual components on this, and employment basically stayed the same at 46.8 versus 46.5. New orders, minimal change, rising from 47.2 to 47.6. And prices paid, meaning like how much are your input costs moving, stayed at 69.4 compared to 69.8 previously. So it's a reading that overall kind of says, hey, things are in the same place they were in a month ago. And so I think that ultimately, when you're looking at this, it's kind of one where you say, all right, like there's not really anything that's different, and you would kind of expect a little bit of a bounce just because the news flow has been better, quite honestly.
Yeah, I guess the question is, so the last few months of readings on this type of thing, you had the pretty big fears about recession and the ability to get raw materials into the United States for all sorts of manufacturers. On the other hand, you did have some manufacturers in the U.S. who were saying, yeah, these tariffs work well for us, and so we hope they stay in place. Those were relatively few and far between, but the Auto Workers Union, for example, has been resoundingly in favor of these tariffs. If they are now being walked back, right, do you have some group of manufacturers saying, oh, good, we should be finally able to get our hands on some rare earths and continue our manufacturing process, and others a little bit more pessimistic because, hey, these tariffs are de-escalating and they aren't going to be as impactful and helpful for our business as possible. I guess that could be some of it, because that's what you've seen over the last few months has been, oh, this economy is almost certainly going into recession, to, well, maybe not, but it might be a more challenging environment for us U.S.-based manufacturers.
So ultimately, I'm not really sure if this number even means anything, because the ISM manufacturing has not mattered for the last 5 years.
True.
It's just been noise that has not contributed anything statistically. So I think, a few minutes is about as much time as I'd like to spend on it. But it's worth talking about because historically it has been a good signal for the broader economy. It just has not been that signal pretty much since 2020 and the COVID-19 outbreak.
And markets, by the way,
they didn't like it initially. The S&P sold off another 1/4 to 1/3% on the release of this. It's kind of picked that back up. So
I was going to say, markets were negative to start the day before trading began. This came out, they sold off, and they've kind of remade up some of those losses early on. There's plenty of volatility out there in markets today, but not seemingly on this report.
So this is what you have from ISM manufacturing. Other data points that we're going to be getting this week. Tomorrow we get the JOLTS report, the Job Openings and Labor Turnover Survey. Remember, this report is delayed by a month, so we're getting April data for this, even though it's going to be June 3rd. And so you do always look at this and you're like, what do I do with this? It's a little out of date at this point, but it is what it is. It's still a good report just to get additional data on the labor market. Wednesday, we're going to be getting ISM services and the ADP employment change, which no one cares about, but everyone talks about whenever it's bad.
Correct. It's the only time it ever gets brought up.
It's not a useful signal. It's just, hey, if it's bad, people mention that it's bad.
Yep.
So we'll mention that people mention it. Thursday, we get weekly jobless claims, and we're also going to be getting productivity and unit labor cost data. And then on Friday, we get the jobs report for the month of May, which right now, consensus estimate, 130,000 jobs created, unemployment flat at 4.2%, and those are the only two big numbers that are even worth predicting, because everything else, you have no idea.
Let's stay on the labor market for a moment here, Chuck. This has been, well, obviously one of the two main stories that matters to the Federal Reserve, will continue to be, and generally speaking has held up fairly well in spite of what I think almost anyone without a job right now would describe as a very challenging labor market. But the stats that probably matter most to the Fed, such as the unemployment rate and wages, have been relatively stable. What have we been reading? What have we been seeing from other data points when it comes to the labor market most recently? And if there is a underlying issue with the labor market, where is it coming from, I guess?
Well, I think the labor market's kind of been in the same place for the last 6 to 9 months, which is if you have a job, great. Companies really aren't laying people off in any meaningful numbers. Like, there's always some companies that are, but by and large, we have not seen any change in the number of layoffs that have been happening. If you don't have a job, companies really aren't hiring that much. The hires rate right now is consistent with what we saw back in 2014, 2015, and so more consistent with an unemployment rate that is close to like 5.5% than, low fours. But ultimately, because the labor market's been so stagnant, and combined with a couple of factors as well, demographics are playing into the unemployment rate staying low, and they'll continue to for the next 5 to 10 years, in my opinion. And the reason why is baby boomers. They're retiring, and there are not enough Gen Zers to take all of their jobs. That, when combined with what we are seeing from an immigration perspective, with smaller numbers on the immigration front, both legally and illegally, means that the labor market may remain secularly tight over the next 5 to 10 years. And so you may not get the same signal from the unemployment rate that you normally do, simply because there aren't enough people for the unemployment rate to rise the way that it necessarily has in previous business cycles, given the wave of retirements from baby boomers. So I think that's something that's interesting to watch. Even though the unemployment rate isn't rising at this point, we are seeing some signs in the continuing claims data that it may start to in the coming weeks and months, but we need to kind of see how that develops, just because you can always get a few weeks of weird claims data that go back to normal after a few weeks, and that's all we've seen right now is a few weeks of weird claims data that's elevated. But you need to see more from that in order to be like, hey, there's really a problem where unemployment's going to start to rise here.
Right. And I think companies, by and large, have been just putting plans on ice. Like you said, they haven't been laying people off en masse. They also haven't been expanding new projects and hiring. And I think they're all kind of looking for a market signal that, hey, the worst is behind us or is yet to come, at which point they unleash either sets of those plans. Yeah, we are going to set up this manufacturing plant and hire a bunch of people, or no, we are going to close this facility and lay off a bunch of people because of concerns about the economy. Right now, we kind of anticipated we would be in this weird period until late this summer, where I don't think executives have a firm grasp on what they want to do next, because the picture on tariffs, taxes, and economic growth are not terribly clear.
Let's take a quick break here. When we come back, we'll update you on what we've learned over the last few days about the state of play between the U.S. and China on trade right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and now's the perfect time to register for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
Couple pieces here on the state of play between the U.S. and China. One from the Wall Street Journal titled, China Hits Back Against Trump Claims That It Broke Trade Truce. That sounds spicy. And the other one is U.S. dependence on China for rare earth magnets is causing shortages. Which would you like to begin on?
Yeah, Michael? I mean, all of this comes on the heels of President Trump's social media post on the 30th, which was Friday
morning.
That accusing China of totally violating their agreement with the U.S. and that he was no longer going to be Mr. Nice Guy, quote. Let's start off with the rare earth stuff, because I think that's important context for just some of the underlying threats that China has been sending over to the U.S. here when it comes to things. So I think the only real important piece that you need to know if you're trying to understand all of this is that China currently manufactures about 99%, or I don't know if you want to call it manufacture, mines. 99% of all rare earth materials.
And by the way, just because I know that we talk about these an awful lot, but don't actually get into like what they are, rare earths, number one, aren't actually rare on Earth. First and foremost. If you look at them just as an example, the most plentiful one, which is an element called cerium, which I know we're all very familiar with, It's actually the 25th most abundant element in the Earth's crust. There's more of it in the Earth's crust than copper. It's just we don't. I don't know. I don't even know why they're called rare earth, to be completely honest.
Okay.
But they're not actually as rare or as scarce as you would think. But the elements that fall into this category: scandium, yttrium, lanthanum, cerium, neodymium, promethium, samarium, europium, gadolinium, terbium, dysprosium, holmium, erbium, thulium.
How did you go about
ytterbium,
this without making me do this?
Because
missed opportunity.
Because I want to have the segment finish.
Okay.
And lutetium.
Uh-huh.
So these are the rare earths, and in general, aside from like a couple of them, they're actually pretty plentiful in the Earth's crust. It's really just that, hey, in order to mine them, you got to dig big old holes in the ground. That's the technical term. And we generally, in the United States, don't love having big old holes dug in the ground right next to us.
And, a few different things about this. We did, at some point decades ago, do some of this in the United States. We had, the New York Times has a piece here about, a factory in Indiana that used to do this and turn these rare earths into magnets. They moved production to China decades ago. There was a facility out in California. They had a pretty bad radiation leak, and that was shut down, I think, in the 90s and never really reopened. But for a number of different reasons, manufacturers have sent this type of stuff, miners have sent this type of production to China. And I guess if I'm going to oversimplify it, it's much looser restrictions on environmental stuff and much cheaper labor.
Well,
it's not so complicated that we don't know how to do it in the United States.
And if someone complains about it, you move them out of their house and put the mine there anyways.
In China.
Yes.
Correct. Yeah, you don't really do that.
It's not even an environmental thing. It's like, hey, you can't object to this, so just move.
And so because of that, because this is kind of what China does, they own a bunch of state-operated enterprises that make these rare earths. They run them at, incredibly low profit margins so that it's very difficult for a competitor, say in the United States, to start this back up and go do it. And they kind of have the market cornered for this type of thing. And the question that we are now facing, I think, long term is how much money is the United States government willing to pour into investing in this type of critical thing in order to secure the supply chains and be able to manufacture all the stuff that we need to, like cars and all these other parts of the supply chain.
Yeah, the problem is that this stuff goes into all kinds of different things. One of the biggest uses is magnets, which if you know anything that has an electric motor, magnets are, literally the driving force behind them.
Mm-hmm.
Other things, catalysts, polishing uses, metallurgy, batteries, glass, ceramics, and pigments. So these
forget about like all the commercial uses. You can't make nearly any of our military industrial equipment without these rare earths,
or at least at some level.
Yep.
Yeah, and so you've got problems if you can't produce this stuff domestically. This is the kind of thing where, hey, even though it's pretty ugly to produce, because of localized pollution and things like that from mines that pull this stuff out of the ground, quite honestly, you need to be able to do this in the United States.
It seems like that. And
this is a national security issue.
Absolutely. And by the way, it's not, I know we're all just hearing about it, but in 2010, China restricted these types of magnets from being shipped to Japan for a 2-month time period. It brought their entire economy to a screeching halt. And we knew about it then, understood it then, took a few steps here and there to try and invest, but by and large didn't do enough, and so all the manufacturing remains in China today.
I did find out why they're called rare earths.
Oh, good.
If you're interested.
Yeah. They're best served rare?
Yes, medium at most. I'll quote here from Wikipedia. The first rare earth mineral discovered in 1787 was gadolinium, a black mineral composed of cerium, yttrium, iron, silicon, and other elements. It was extracted from a mine in the village of Ytterby, Sweden, and 4 of the rare earths bear names derived from this single location. But basically, they were rare when they were initially being found.
Got it.
And as it's become more economically feasible to extract different types of ore, people realized, hey, there's actually a lot of this stuff floating around. We just didn't have the ability to get it out of the ground 250 years ago.
So that's kind of been the state of play now for the last 20 or 30 some odd years. The Chinese, as they do, developed a state-run industry, put pretty much anybody else that wants to do this out of business, or prevented them from starting up and competing unless it's going to be sponsored by the state. And not just the United States. The entire globe has accepted that reality. I think when we come back, we should just kind of talk a little bit more about the escalation between the U.S. and China and that lever that they have to pull versus the ones we have to pull in these trade negotiations. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Your Retirement Preparation Checklist. Mike, one of the items on this is to address outstanding debts, and by that, I don't think we mean pay everything off, but more make sure you have a plan for different types of debt.
Yeah, there's always been that real goal for I think a lot of retirees to have no mortgage when you get to retirement, and I still see people trying to accomplish that even if they might have a sub 3% mortgage, for example, and there can be some psychological benefit to paying off that piece of debt, but where it comes down to is prioritizing, hey, I might have a car loan, I might have a home equity line of credit, and while the mortgage could be the biggest payment, it shouldn't always be prioritized.
Beyond that, I also think it is something that you need to figure out how it fits into your monthly budget and whether you can continue to spend in the fashion that you've been spending, or do you have to make changes there?
Right. A lot of people use some rules of thumb when it comes to how much income they'll need in retirement, and those can be useful, but it all has to be customized to your individual plan. And the last thing you want to do is pay a whole bunch in taxes just to be able to pay down some debt that wasn't really a priority in the first place. And so definitely addressing your debt and knowing how to do that intelligently when you approach retirement is key and important.
The guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001. That number again is 800-393-4001, and the guide is titled Your Retirement Preparation Checklist.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, as Wall Street turns the calendar to a new month, markets are in negative territory, but not as bad as about half an hour ago as investors react to the latest trade tensions between the U.S. and China, in addition to disappointing ISM data we received right around 10 o'clock. Right now, the Dow is down by 206 points, or about 0.5%. S&P 500 down by 0.25%, and the NASDAQ down by only 10 points at the moment. Russell 2000 is off by 0.2%. 10-year Treasury yield flat at 4.42%, and crude oil jumping 3% higher today, trading at $62.67 a barrel. Steel stocks are seeing gains on the day after President Trump doubled tariffs on the metal to 50% from 25%. Cleveland Cliffs jumping by 28%. Nucor and Steel Dynamics also up by 11%. Meanwhile, shares in BioNTech rallying 18% after the German biotech company and Bristol Myers Squibb agreed to a multi-billion dollar deal to co-develop an experimental cancer drug. Sticking with the biotech sector, where Moderna seeing a gain of 1.5% after the FDA approved its next-gen COVID vaccine for adults 65 and older. French drug maker Sanofi agreed to buy Blueprint Medicines for up to $9.5 billion. Sanofi pulling back by about 0.25%, while Blueprint is up by 26%. Campbell's stock is flat after the food company logged higher quarterly sales, driven by more consumers cooking at home and a recent acquisition. However, its snacks business continued to struggle. And according to the Wall Street Journal, Meta plans to fully automate advertisement creation using artificial intelligence by the end of 2026. Meta is up by over 1% on the day. I'm Tucker Silva, and that's Wall Street Watch.
Mike, you wanted to talk a little bit more about what's going on with the U.S. and China on trade.
Yeah, so obviously over the weekend, or on Friday, President Trump accused them of breaking the terms of the agreement. China fired back with some of their own accusations about the Trump White House canceling Chinese visas, about restricting exports of semiconductors, and honestly, both of them have compelling evidence. I don't know exactly what was agreed to in these Geneva terms, but
it's because there's no written agreement.
Right. So, whatever handshake deal was done, I'm not sure that it addressed these items in particular, but both countries have some non-tariff ability to fire back at the other country, and the all-important question here is, does this continue to re-escalate? It has over the last couple of days, but not with anything meaningful. And then I guess the second important question is, if the Trump administration wants to use tariff measures to fire back at China, which ones do they use given the legal concerns about the existing ones they've structured?
Yeah, I think... Look, the specifics are going to be what they're going to be, simply because I don't think any of us are going to be able to predict the exact date or, measure used by either the Trump administration or the Chinese government as they're, kind of still going at it here.
Sure.
It is clear that, hey, you're not at a complete, reset and everyone feeling good about things. Like, there still are some significant tensions here. And so I think you're kind of in the same spot that you've been in for the last couple of months, which is, hey, who's willing to stomach more pain in order to get the resolution that they want out of this? And you can't predict that. There is no way to predict that. It's not a predictable equilibrium that you arrive at.
It's not, but I'll tell you, I really don't like the idea. I don't love the United States odds in a game of who can inflict more pain on their economy's chicken.
Who can inflict more pain,
I guess, sustain
on their economy's chicken?
Who can sustain more pain on their own economy's chicken?
Oh, so you're not talking about the chicken that belongs to the economy. No. You're talking about a game of chicken
that's named who can sustain more pain on themselves.
I'm like, I didn't even know our economy had a chicken.
Yeah.
Got it. Okay. So
I don't love our odds in that game. We're a democracy.
Yes. Okay. Talk to me about why that matters.
If what we end up in is a continued trade war and or non-trade barriers escalation, our main advantages in that are a more diverse economy and restrictions of semiconductors and, forbidding students from coming to the U.S. as well as.
I disagree. So here's the thing. Like, we can point to places where each economy is vulnerable. Like the U.S., you can say, hey, China, controls all these rare earth elements, and we won't be able to make a lot of, the machinery that we need in our economy.
Sure.
Okay, that's fine. Does China produce anywhere near enough food to feed its population?
No,
they don't.
But again, that argument only works if they can't find it elsewhere.
Well, isn't it the same with the U.S.? I mean, ultimately, if the U.S. says, hey, we need more of this stuff, great. Like, you think that China's the only country that can engage in, like, duping where stuff comes from?
No,
I'm sure the U.S. could lie. I'm not saying that this would be easier, like, rapid or in the quantities that you need immediately, but, okay, there's some wealthy person or wealthy group out of Luxembourg that's going to be able to get you the selenium that you need, or was the cerium, or whatever the heck the rare earths are. Like, I'm not saying it will be easy or clean, but I'm saying China's not the only country that can figure out ways around export restrictions and stuff.
True. I think I'm much more optimistic, medium to long term, about the state of the U.S. demographically and economically than China. China is in a very serious demographic issue that they are going to need to reckon with over the course of the next few decades that they don't seem to have a solution for. And for that reason alone, I think the United States is in such a better position. Short term, I just worry about our ability to withstand an economic downturn compared to China's willingness and ability to withstand the same downturn. Maybe that downturn, maybe that's the wrong question to ask because we won't actually face it.
I think talking about things that generally makes it impossible to analyze.
Yeah, that's fair.
Because, like, the path matters as well. And what I mean by the path mattering is not just, hey, how does the economy evolve, but what are, like, the public-facing events that can either cause internal strife or create additional unity amongst the population? Like, these things don't happen in a vacuum. And so, if there's some event out there where all of a sudden the whole U.S. population is like, hey, you know what, we really got to band together and do this, like, you can't even predict, like, what that is. So I kind of caution against those things that are inherently not able to be predicted, not even unpredictable in, like, the sense we talk about them, but just like, hey, again, in a game of chicken, you can't say any side is more or less likely to win because if everyone starts playing that game, you don't know where individuals' breaking points are.
True.
And for all the talk about, the Chinese government, like, they work, further ahead, and the Chinese population, like, they don't care about them, and so, like, they'll just, subjugate them and this and... Well, there's also no feedback that goes up to the Chinese government about how bad things really are amongst the populace. And eventually that's kind of what takes down most authoritarian regimes eventually is they don't realize how bad things have gotten.
True.
and it happens quickly when it does. And
I'm
not
very slowly and then all at once.
I'm not saying we're at that point, but like people forget that the Soviet Union basically fell in 3 days. And I'm not comparing the two, except that I'm comparing the two. Because, quite honestly, like, Xi has kind of welcomed comparisons to the Soviet Union. So I do think it's actually an apt comparison from certain standpoints, but, not all of them, obviously. Let's see. Let's take a quick break here. When we come back... Tariff. Are we going to do more tariffs?
We can save them.
President Trump's going to raise the tariff on steel and aluminum imports to 50% from 25%. Yep. Glad we covered that. Let's talk about the U.S. deficit when we return.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Elder life planning can be overwhelming, so be sure you're prepared, or you could make costly mistakes that affect your overall plan. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit you and your family by calling 866-848-5699 right now and asking for your free guide today. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, so we have a piece here today. This is in Bloomberg. Headline is, Bessent says U.S. will never default as Congress faces Endgame. It's kind of mixing up a few different topics there that makes the headline seem way more dramatic than it actually is. Bessent is ultimately right, I believe, in that, yeah, if the U.S. doesn't want to, it will never default because it can print its own currency. The piece on Congress getting towards its endgame is in reference to the debt ceiling, which we always have to bring up every couple of years when it becomes a thing because, oh boy, the debt ceiling's coming up again, and gosh, this one's going to be the time where they might really do it. And ultimately, they always end up raising the debt ceiling because, gee, guess what? If you
not
didn't,
doing so is shooting yourself in your own torso.
Yes, then it would actually be like basically defaulting on your debt, not because you can't pay it, but because you choose not to. It's like if you were to take out a mortgage where you're paying $1,000 a month, and you agreed to take out that mortgage with the bank.
Yep.
And then you get to, halfway through the year and you're like, well, I've already spent as much money as I feel comfortable spending this year, so I'm not going to be making my payments for the rest of the year, even though I can. That's basically what the debt ceiling is. It's reneging on debts that you have already agreed to pay. And what I mean by that is when the U.S. government, when Congress and the president pass a budget or a continuing resolution, they are laying out federal spending that they are agreeing to. And if you don't raise the debt ceiling, you're basically saying, well, we can't pay what we've already agreed to spend on. And that's dumb, which is why we think the debt ceiling discussion, crisis, whatever happens, is also dumb.
So the debt ceiling piece comes into play, where are we, like July
to September.
To September, somewhere in there. And the Treasury in the past has had to use extraordinary measures to make sure we don't default, robbing Peter to pay Paul, if you will, for periods of time. But
Peter always gets screwed.
He does. But in either case, that deadline is hypothetically important because Congress wants to pass all of this, increase the debt ceiling, and pass their tax bill at the same time if they can. Just makes it a little bit easier to get all the votes that you need if it's all that important at the same time. And again, regardless of what happens with the shape and form of the tax bill, I think I'm with Scott Bessent that we're going to raise the debt ceiling and not default on our debt. There we go.
Yes.
Summer in New England is nearly upon us. The kids are home from school, the sun doesn't set until after 8, and it's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI is something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Mohammed El Arian, who previously was very high up at PIMCO, he's now the president of Queen's College in Cambridge and an advisor to Allianz and Gramercy.
And I don't believe has gone 3 months without criticizing the Fed in the last 5 years or so.
He's got a piece here in the Financial Times I'm going to read part of a paragraph from this and talking about, what the Fed needs to improve. They include improving communication by measures such as creating and publicly releasing a formal structure for the use of forward guidance on policy, publishing staff forecasts, giving explicit guidance on the trade-offs between employment and inflation, and developing a transparent framework to assess quantitative easing and tightening programs.
Gotta tell you.
So here's the thing. In the last 5 years, there have been times where we've been really critical of the Fed. Late 21, all of 22, the first 2/3 of 23. I believe the technical term used by Mark Fandetti is...
failure. Yeah, that one.
There have been other times, the last 12 to 18 months, where we've said, hey, they're doing a pretty good job. Unemployment's still in the low 4s. Inflation has now come down to the mid 2s. It's tough to find that much to be critical of at this point. And in all of this, I don't think any of what we've been critical of has been, hey, the Fed is communicating not enough, or they're communicating wrong, and that's why, policy isn't effective. Our criticisms were, hey, in March of 2022, you got inflation at like 8-ish%, and Russia just invaded Ukraine, and oil just went over $100 a barrel, and you're going to raise rates 0.25% because you're not sure if this is inflationary? No, why are you guys not moving faster on policy? It's why are your actions not more robust when they need it to be? Because other than that, I'll be 100% honest. Jay Powell's been in charge of the Fed since, is it 2018 when he started? Late 17. I think it was early 18.
Towards the end of Trump administration. I don't remember exactly.
I think it was February of 2018
Sure.
When he started. I'm pulling it up now just to be correct. Yeah, Jay Powell oh no, that was when he was born. Actually, no, this is fascinating. He was born on February 4th, 1953. He became chair of the Fed on February 5th, 2018. Happy birthday, Jay Powell, right?
Yeah.
President Trump appointed him then shortly after his 65th birthday. Most people retire around 65. Jay's
Not
like,
Jay Powell.
I'm going to run the Fed, thank you very much. Give me the purple tie. So I think during that tenure, the only time that I can point to where Jay has been objectively bad, and I'm putting it all on him just because he's the head.
Sure.
22 and the first half of 23. There are parts where you could be like, hey, he needed to work on his communication, but he figured it out pretty quickly, like the end of 18. But ultimately, if I'm grading Jay Powell and his communication, like not his monetary policy, but his communication, I give him a solid B. He always says, he lets a couple things slip, which I kind of like. Like, he actually lets you know what he's really thinking, which economists would argue he shouldn't do. But I think it actually helps to inform, how, when we know what he's thinking, it helps us to inform what they're going to do. Jay Powell's policy, even for, again, outside of that one period, which you could objectively grade as probably like a D-, the rest of it is probably A-. Does it average to like a C+? Sure, probably, because you can't undo, you can't just void a 21-month period. But it's not the communication that's the problem.
No, it's one error that you can constantly, you can permanently criticize.
It was the policy for about a year and a half that was the problem. Quick break. When we come back, hour 2.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Summer in New England is nearly upon us. The kids are home from school, the sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are many different elements to a complete retirement plan, and it takes time to make sure you've covered all your bases. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Our new guide is called Your Retirement Preparation Checklist, and it may offer you the guidance you need to make the right decisions about your retirement plan. From deciding on a specific date to retire, to reviewing your income sources, to picking a place to live, this guide discusses numerous topics that are important to your overall planning. Many other issues need to be considered as well, like solidifying your estate plan and establishing lifestyle goals. Call us right now at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking things off here, a warm welcome to all those joining us on Sirius XM Channel 132. It is our first show that we're doing on your station. We appreciate you listening to us, to all of our other listeners all around the country. Always appreciate you. Obviously, it's Chuck, Mike, and Tucker with you, and top story this hour is... well, what's moving in markets today? We got Jay Powell who's going to be speaking a little bit later in the day. Don't really know exactly what the topic of conversation is going to be, but in advance of that, markets are relatively flat, a little bit mixed. The Dow is off 176 points right now, about 0.4%. The S&P 500 down 10 points, about 0.25%. NASDAQ is now up 3 points, 0.02% moving up. And so, again, kind of mixed, fairly quiet markets to start off the week here. We got the 10-year U.S. Treasury selling off very modestly, up 1.6 basis points to 4.434%. We got a big move happening in oil. It was up nearly 5% on West Texas Intermediate earlier in the day, now up about 3.5% to $62.95, up $2.16 per barrel. When we look at gold, another big move up there as well, up 85.60 an ounce to 33.74 and 50 cents. And so those are your major moves happening in the market. We get a piece from CNBC today. It's titled, "Why the Stock Market Continues to Hold Up in the Face of Uncertain Trade Policy." And the answer is the economic data has not gotten bad yet.
Yeah, earnings have been really solid. What do we see? Mag 7 earnings showed up at a 27% jump from a year earlier. Why does it matter just what I'm talking about with Mag 7? Well, they drag up the entire rest of the market. We see that every single day. And so, yeah, you did see that earnings for the first quarter, where do we come in from FactSet-wise? Like 13, 14% year-over-year growth?
13.3% for Q1 with 98% of companies reporting.
So why is the market holding up pretty well? There's been a massive de-escalation when it comes to trade policy, which I think many had predicted would result in recession if it continued forward. You have seen earnings that held on pretty darn well without an uptick in any of the core data that comes to the economy that really matters. Is sentiment bad in some areas and some surveys? Absolutely. Does sentiment mean people stop spending money? No, not always. Can lead to that, but it doesn't always mean that things are going to turn.
The question is going to be very simple for the stock market. Do earnings continue to grow at the pace that they're projected to? Or does a slowing economy hit and impact earnings? And to give you some context on this, right now, the S&P 500 is trading 21.3x forward earnings, according to FactSet's May 30th report. If you look at what typically happens in a recession, earnings typically decline anywhere from 10 to 25%. So if you look at it right now and you say, okay, right now you got S&P 500 earnings, projected, to be next year in 2025, somewhere around, $305, $310 a share. I think actually we're now down around, not per share, but $310. If you think you're going to go from like 300 down to 250, and you say, hey, instead of a 21.3x multiple, slap an 18 on it, that gets you to 4,500 on the S&P 500. Like there is your 25% downside scenario, is a standard run-of-the-mill recession that happens, lasts anywhere from 2 to 6 quarters, and then you move on with your economy, even though there's been an awful lot of economic pain during that time.
Right.
If that doesn't materialize, then you look at this and you say, yeah, this is a market that's steeply valued, but if earnings do continue to grow for, this year, FactSet's projections are, or not their projections, but the consensus analyst estimates are for 9.1% earnings growth this year now and 13.5% next year. Okay, if that's what you end up getting, this market is highly valued, but highly valued markets can stay that way for quite a while. See the last, 4 years of the 1990s, and there's continued upside here. So the data is going to ultimately have to show us over the next 3 to 4 months where things are going, because quite honestly, like if you get out to like next May or June and nothing has happened yet, you can't really point back to tariff announcements as being a cause for anything. The economy's in a completely different place, 12 months after the fact.
I'll also point out that again, there are many different types of companies that do business in the United States, many of whom rely heavily on trade with foreign countries. But some of the biggest ones don't have a whole lot of impact from trade tariffs. Think about Microsoft. Nvidia is a different story, given some of the breakdown of trade between the U.S. and China. But Alphabet, Google's parent company, Meta, Facebook's parent company. These aren't companies that you look at and say, oh, yeah, if trade escalates with the European Union, am I terrified about Microsoft's earnings potential?
Did you say terrified or terrified?
Oh, yeah, good. I didn't pick up on that. It was an accident. These aren't companies that come to mind immediately to say, oh, yeah, look out. trade escalation between the EU and the United States, I'm really worried about Microsoft and Meta's earnings. No, probably not. Maybe eventually.
Depends on the potential responses. You could see a world in which, another country or bloc says, hey, you know what? You're tariffing our goods imports. We're going to tariff your services imports.
Could be. But the low-hanging fruit so far has been,
right,
go after us. We're going to hit your bourbon industry. We're going to hit your nat gas industry and a few others.
Yeah. So I think ultimately, again, very easy answer on the question of, hey, why is the stock market held up so well? And its earnings have held up well, and the economic data has been fine as well. Are there signs that the economic data could change? Yeah, we've talked about some of the things as it relates to continuing jobless claims and things like that may be in the early stages of telling us something, but they're still early, and you see wiggles all the time that turn into nothing. And so on our show, again, if you're one of those listeners, on Sirius joining us for the first time, most people in the financial business are the ones who call recession like 100 times out of one recession. They're always trying to hype up the recession. Oh, this is good.
This is the big one.
We're the show you listen to if you want to hear, hey, there's something happening, but it's probably nothing. Because more often than not, that's the case in the economy. It's not to make things boring. It's just if you're always dialed up to 11, well, then what happens when it actually hits the fan? How we don't go to 12.
Our pets' heads can't always be falling off.
We don't go to 12, We go to 12 o'clock, but not 12 on the audio dial. How about that? Let's take a quick break here. When we come back, we got a little bit of trivia, and then we're going to talk about Nvidia and their China business after this.
The Financial Exchange has gone national. Hear the show daily on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news, what's happening on Wall Street, and the president's economic agenda. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but irrevocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com.
Preparing for retirement is a time-consuming and challenging process. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're at the point where you can see retirement approaching, now is the time to make sure your plan covers all the bases. Our new guide is called Your Retirement Preparation Checklist, and it discusses a variety of important topics as you make decisions for later life. Everything from reviewing your income sources so that you have a full understanding of how much money you'll need in retirement, to addressing any outstanding debt, which may lessen your overall financial burden. Planning for retirement takes a great great deal of time and effort, and this new guide is designed to offer you the guidance you may need. Call us at 800-393-4001 and request your free guide today. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, let's do a little bit of trivia here on the Financial Exchange. And on this day back in 2004, Ken Jennings began his record-breaking winning streak on Jeopardy! Jennings won over $2.5 million during his winning streak. So, trivia question today. How many episodes did Ken Jennings win during his record-breaking streak? Once again, how many episodes did Ken Jennings win during his record-breaking streak? Be the seventh person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the seventh correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Wall Street Journal piece, why Nvidia just can't quit China. Money.
Anything else to say here?
No.
I mean, it's money. It's money that stems from the Chinese Communist Party investing a lot of money in artificial intelligence, just like the United States, although more of it's probably private money here in the U.S., and producing massive numbers of AI researchers and top talents out of their universities to focus on AI development, and willingness to pay companies like Nvidia for their highest-end chips.
So, here's the thing. Jensen Huang has been all over the place the last couple of weeks talking about how much he dislikes not being able to sell into China the way that he wants to.
Yes.
I don't think I've ever heard him talk publicly about something the way he's talking about this. And his argument boils down to one very simple, it's a really simple one. He basically says, look, if you allowed us to sell into China, there would be no Chinese domestic industry for producing the kind of chips required to run AI because we have the best product out there and no one can compete with us. That's his argument.
And the flip side of that is if you don't allow us to, then China will build its own walled-off semiconductor industry, and you don't want that because go look at every other industry where China has been able to do this, and sometimes it's a pretty bad case scenario.
Except the counter to that is most of those are cases where China invites in foreign competitors, see Tesla as an example, basically watches what they do and has, joint ventures set up to be able to know exactly how the stuff is produced. And then several years later, Chinese domestic firms, often state-owned enterprises, start producing competitors that then put an awful lot of pressure on the foreign competitor, in many cases either forcing them out of the country or forcing them out of business.
Yeah, I was going to say, there seems to me to be a very compelling case that China is going to attempt to develop their own walled-off, self-dependent semiconductor industry no matter what. And it's a question only of how long it takes.
So I guess where I come back to on this is something that we've talked about quite often, which is if you look at things only through the economics lens, you basically get to a point where you're like, well, everyone should be able to sell everything to anyone.
That's the idea of free trade, yep.
No, but like everyone should be able to sell anything to everyone, like whatever you want. Like, hey, Nvidia, if you want to like start selling like illicit substances or whatever, like, okay, but obviously there are non-economic reasons why we decide, hey, maybe we shouldn't allow multinational corporations to load up beverages with cocaine. Like we decide this is, a bad thing.
We should have a speed limit.
Correct. Or, in national security concerns, hey, during the Cold War, maybe even though, Raytheon could make a whole bunch of money selling to the Soviet Union, probably not a good idea for them to be able to. Or even more recently, think about congressional review of weapons sales to countries in the Middle East and stuff like that. And the F-35 program and how we don't allow Turkey to participate in it anymore after Turkey, took delivery of Russian missile systems. That there are reasons for national security that you don't want to give certain countries access to the crown jewels of U.S. technology. And in this case, I mean, look, the great thing that you can say about Nvidia is they are one of the crown jewels of U.S. technology these days. I mean, the stuff that they can do with their processors is wild. But because of what artificial intelligence could mean, not just in the conventional military sense, but also in kind of the modern evolution of, how militaries might plan large-scale attacks on competitors, the ability of artificial intelligence to be used for, electronic warfare and things along those lines, cyber warfare. I mean, like, there's all kinds of problems with simply allowing Nvidia to sell their chips to basically anyone in China.
Yep. So
what do we do with this is the question.
I mean, if you're Nvidia and you're the CEO of Nvidia, I think you probably will continue to vent your frustrations and push for change there because it's going to be your bottom line. But I think from a U.S. government standpoint, you look at this for what it is, a strategic threat to the United States, and prevent it from happening, while fully understanding that, generally speaking, when we're talking about high-tech stuff like this, you don't prevent a country forever from developing it, especially when it's China. Right? Like,
no.
My guess would be, even if we have the most robust chip restrictions on China ever, which we don't because we're selling this stuff to countries that will probably sell it black market back to China, see many of the deals we made in the Middle East, but maybe you can delay it a couple of years. And as long as you're going in eyes wide open about that part, because I don't think it will be a permanent delay in China's ability to build their own semiconductor industry, then that might be worth it.
So, I don't have a ton of sympathy for Jensen's arguments on this. I just don't.
No.
So,
and we've got a few decades of history of companies making this argument internally over and over again. Well, look at the size of the Chinese market and how profitable it can be. And for decades now, I don't understand how CEOs have not learned this lesson yet. Or maybe the lesson they've learned is it's worth the sacrifice. But if you go sell, especially a high-tech product to China, the implicit deal is you can sell it here, you can manufacture it here, but we're going to learn how you do it.
And we're going to make better, cheaper competitors.
Or at least cheaper. Not always better, but cheaper.
No, I'll say they're oftentimes better.
Oftentimes they are better. Yep.
Like they're oftentimes better. Like when we're talking about if you look at like Chinese cell phones, just as an example, they're better technologically than anything Apple offers.
You're getting to the point now, by the way, where you can make the same argument about Chinese-made vehicles.
And I'm not saying I would ever buy either of them because I have all kinds of privacy concerns about where that data goes. But ultimately, if the Chinese government says, hey, we're going to funnel a bunch of money to state-owned enterprises to produce this stuff more cheaply than anyone else can and subsidize technology that might not even really be feasible in most cases. Like you talk about the the really fast charging for the EVs that they're doing over there. And it's like, well, this has to be located like on top
next
of
to
a reactor of a nuclear power plant in order to work. And
by the way, that's not my opinion. I've never driven a BYD car. That's the opinion of I think, rumored opinion of the CEO of Ford.
Yeah, he came back from China and was like, we're all going to die.
We have some catching up to do,
folks. I think he said it was basically like an extinction-level threat to other car makers. So I think where I get to on all of this is, hey, the best way to counter development of new technologies from China is to pull out all the stops to develop what you can internally and restrict the heck out of what you export to them that could in any way, shape, or form be repurposed for national security uses by the Chinese government. It's not the best economic proposal.
No.
But I don't know, you can't just listen to the dollar signs on this stuff because that gets you to a pretty bad place if you're talking about a country that does not share the same views when it comes to things like freedom of speech, religion, and all the things that, we've generally viewed to be important in the world. So there's that. Let's take a quick break here. When we come back, we got the trivia answer, and then we are talking Social Security after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long-term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Your Retirement Preparation Checklist. One of the items on that list, reviewing your investment portfolio. And Mike, I think one of the biggest mistakes I see people make is making no changes to their investment portfolio right up until the minute they retire and then making a drastic shift.
Yeah, I mean, look, that drastic shift can sometimes be called for, but only if the preparation hasn't been happening over the years. And that's where having a checklist in place and really addressing these things well ahead of retirement is the most comprehensive strategy and probably the best planned strategy that you can have out there.
And when we talk about an asset allocation in retirement, it's not just, hey, I'm X years old, I need to be, situated in a certain fashion. It's much more taking into account your income needs over different time horizons, any other big spending items that you might have, and obviously risk tolerance and time horizon for retirement. Big difference between retiring at 60 and retiring at 70.
Well, and the tools can change too, right? Even if you were in a tool that made you automatically more defensive as you got closer to retirement, like many 401ks do, it might not be the best distribution tool for you when you're actually ready to pull that trigger, stop working, and then ultimately begin taking withdrawals out of that 401k. And so really important to review this piece by piece.
Our guide this month is titled Your Retirement Preparation Checklist, and the way to request it is by calling 800-393-4001. Again, the guide is titled Your Retirement Preparation Checklist, and the way to request it from Armstrong Advisory Group is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are starting off the month of June slightly in negative territory as investors react to the latest trade tensions between the U.S. and China, in addition to disappointing ISM manufacturing data posted earlier this morning. Right now, the Dow is down by about 0.5%, S&P 500 is down by 0.25%, and the NASDAQ only off by 8 points. Russell 2000 is mostly flat. 10-year Treasury yield at the moment is up by 3 basis points, now at 4.45%, and crude oil up 3% higher today, trading at $62.68 a barrel. Steel stocks are seeing gains on the day after President Trump doubled tariffs on the metal to 50% from 25%. Cleveland Cliffs jumping by 24%, while Nucor and Steel Dynamics are also seeing gains. Meanwhile, French drug maker Sanofi agreed to buy Blueprint Medicines for up to $9.5 billion. Sanofi is retreating by about 1%, while Blueprint shares are jumping by 26%. Elsewhere, Alphabet down by 1.5% after a judge on Friday discussed limiting Google's search engine monopoly, including curbing how it competes in AI. According to the Wall Street Journal, Meta plans to fully automate advertisement creation using AI by the end of 2026. Meta up by over 1%. And this afternoon, all eyes will shift to Fed Chairman Jerome Powell, who will be speaking at 1 o'clock, where he is expected to provide insight into the Fed's monetary policy position. I'm Tucker Sullivan. That's Wall Street Watch. Let's pay off our trivia winner today. The winner was Ray from Shrewsbury, Mass. He answered the question, how many episodes did Ken Jennings win during his record-breaking streak? And the answer was 74. So Ray is taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece in Barron's. It's titled Retirees Tune Out the Noise When Filing for Social Security. Mike, what is the noise?
I think threats to the program and concerns that it is going bust, which are all true threats. I don't want to minimize any of those. There are real concerns that I think everyone should have about the viability of a few of our different social programs that we have out there, including Medicare and Social Security. But ultimately, how those get resolved is completely unknowable. And depending on who you talk to, they come up with completely different ideas as to how it's going to be resolved.
Yes.
But I will say that one thing that seems pretty consistent across the board is most experts who know this program, know politics, seem to think it's pretty unlikely that existing recipients of Social Security, and even those that are close to being eligible for Social Security, are going to be affected with their benefits at all.
Because right now, if there are no changes made to the program, when the trust fund reserves are exhausted, which is projected to be anywhere from 2032 to 2034, so anywhere from 7 to 9 years from now, the incoming payroll taxes will only be enough to fund 79% of benefits, meaning if nothing else changed, and based on the way the program is currently structured, retirees who have already claimed Social Security would take a 21% cut in their benefits.
Right, and that's
which is again, that's the thing that makes people nervous.
Yep, and I also think it's misunderstood because rarely do I have anybody telling me, "Oh, I'm pulling Social Security because I'm worried my benefits are going to be cut by 21% 8 years from now."
Right.
Usually, the answer I get is, "I'm pulling my benefits now because I'm worried that Social Security is not going to exist anymore in 10 years." And I have to say, I think that's a completely unfounded concern.
Yes.
The point that we are trying to make is Social Security is often thought of very differently from pretty much every other retirement income source that people have. And my mere point here is I don't think it should be. It should be looked at as just another asset that you have to fund your life down the road. And if you instead attach all this emotion to it, like attaching emotion to your investment portfolio, it can lead you down the wrong path and lead you to make the wrong decision. I'm not telling you have to wait on your Social Security. I don't know who's listening to me right now. That is not the universal advice that anyone would give. The universal advice that I think everyone should take is understand how the program actually works, understand the benefits and drawbacks of taking the benefit at a certain age. And then if you say, look, I understand the concerns, I understand the benefits and drawbacks, and I'm still taking it early because that's what makes me feel good, at least you've done your research and you understand all of that. If you haven't done that yet and you're approaching that Social Security time frame, please give the folks at Armstrong Advisory Group a call. We work with our clients every day on topics like this. And the phone number is 800-393-4001. We offer education and free consultation all across the country. You can call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, I want to talk a little bit about this piece from CNBC discussing the child tax credit and how the tax bill making its way through Congress could potentially change that. And I don't want to get into like the specifics of what the bill says because
standard disclosure on tax bills, we don't know what's going to pass.
Right. When it finally is done, we'll talk about what happened, but so much can change between now and passage that I'm not going to get into specifics on like, well, this is going to be no. Here is, I think, the place that I'm trying to... I've been spending a lot of time on this for the last, 4 or 5 years. Like, having had kids, in the last 4 or 5 years, you spend more time thinking about the child tax credit and what you want it to do. Based on pretty much every body of research out there about whether child tax credits incentivize people to actually have children, I think the answer that I've come to is we shouldn't be using tax policy in that way for 2 reasons. The first, it's not effective. It doesn't actually increase the birth rate. There's a whole bunch of countries in Europe that have put massive child subsidies in place, and their birth rates are still in the toilet.
Yeah, there have been a select few scenarios where this type of policy, all-around type of policy, not just tax policy, have addressed birth rates, but it's been on the heels of investment, not just in tax credits, but in massive government investment in trying to increase the birth rate, including everything from free child care to all sorts of different benefits outside of just here's some extra money on your tax return.
the second piece is, okay, do we want to make it easier for parents with children to have more money in their pocket to spend on their children? Does it produce better outcomes? The research does say pretty conclusively yes in that case, just in terms of being able to afford, in many cases, necessities and some childcare and stuff like that. So I think that it makes sense there. But beyond that, like, trying to get to, hey, what's like the right number for the child tax credit? Hell if I know.
Yeah, and again, where this seems to come out to me is less of a tax policy that seems to have an end goal and more of a tax policy that's designed to give a gift to people that are struggling. And I think a popular one is those with young children, as well as retirees.
What about retirees?
In terms
you have a lot of retirees using the child tax credit?
No, just popular groups to give money to.
Got it. Yes. Retirees tend to vote, and people with children tend to be sympathetic, and you don't want to appear like you are against them.
Yeah. So I'm not necessarily against this, but I don't like when lawmakers put it out there and say, and this is what's going to save the U.S. workforce. Like, I have some doubts about that. Or it's going to make – the worst one is when they say it's going to make childcare cheaper. Because it's not going to do that.
No, generally when we throw more money at anything, it makes it more expensive. Yeah. See, college, healthcare, housing, federally guaranteed mortgages.
Yeah.
Like, sure, they're great when you can get them, but ultimately it drives up the cost of housing.
Mm-hmm.
Yeah, it's not something that I look at and I'm like, hey, this is bad. Like, I think that having large child tax credits, it is a good thing. How large should it be and how should it be I got nothing.
Yeah.
Let's take a quick break here. When we come back, let's do a little bit of Stack Roulette.
The Financial Exchange is now available across the country and around the world on SiriusXM's Business Radio Channel 132. Stay informed about Wall Street trends, economic policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Summer in New England is nearly upon us. The kids are home from school. The sun doesn't set until after 8. It's likely time for you to relax. Well, while you're relaxing, take a few minutes to check out visitusvi.com and research your next vacation in the United States Virgin Islands. The USVI has something for everyone, be it the rich history of St. Croix, the spectacular beaches of St. Thomas, or the tranquil quiet of St. John. Visit one island or all three and enjoy the vacation of a lifetime. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com to make your reservation today. That's visitusvi.com. Protecting your assets is your most important financial responsibility, and creating a trust is a great way to help. Cushing & Dolan are experts in elder law. Their brand new guide out this month is called Unlocking the Power of Irrevocable Medicaid Trusts. There are many types of trusts to consider, but a revocable trust can establish the kinds of safeguards you'll need to protect your assets long term. Learn about how the trust can protect your assets from probate and potentially eliminate your estate taxes. If you're closing in on retirement and have an existing trust that needs a second look, or if you need a new trust to ensure that your assets are secure, call Cushing & Dolan right now at 866-848-5699 and let them help you create a plan that gives you confidence in your financial future. That number again is 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for retirement is much like cramming for a final exam, and no stone should be left unturned before you're ready to take that step. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and we help folks just like you plan for retirement every day. Our new guide is called Your Retirement Planning Checklist, and in it, we'll remind you of the various issues that may be most important to your planning process. Let's start with the date you choose to retire. That'll depend on a variety of factors, including your income and your health. You may also want to modify your investment portfolio to create ways to maintain the wealth you've already earned. And you'll also want to make sure that you're prepared for major unexpected expenses. Life moves quickly, and you'll need to know if you can cover that cost. Call us today at 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visit usvi.com. That's visit usvi.com.
Michael, what have you for Stack Roulette?
I have summer vacation plans, and
cool.
The continued story is about foreigners dropping their plans to visit the United States, and we're starting to see some real evidence of it. And I think certainly if you are in the Portland area of Maine or Burlington, Vermont, or anywhere around there, you're seeing the effects. And in fact, air travel from Canada to the United States in April dropped some 20%, while land crossings dropped 35%. And the Wall Street Journal has this piece today on this very subject. And what you do notice in their numbers is, there's a drop-off from 24 to 25. But what they point out is that there's a much more severe drop-off that occurred a few years ago and coincided with COVID. And since then, the numbers seemingly have not ever rebounded to where they were when you go take a look at, for instance, UK tourism to the United States, French, Netherlands tourism to the United States, and visitor numbers. They have never gotten back to where they were pre-COVID. And I find that piece almost as interesting as I do this most recent piece about current travelers year over year declining. The overall tourism story to the United States seems to be one that just hasn't recovered from pre-pandemic.
The data that they have here is also looking at the first 4 months of the year.
Right.
And I guess what I'll say is I don't know that that's a relevant period.
Right. Did people change their plans based on what they were seeing on trade tensions for the first 4 months of the year, or did they just say, no, I booked this back in September and I'm going to stay with my plans?
And I think for most people it's like, no, I already booked this. I'm not changing it. What I'm interested in seeing is, hey, what do the next 8 months of the year look like? In particular, hey, show me like the second half of the year, because we know that from hearing from different airlines and hotels, there's a lot of booking that happens, within 8 weeks of people actually going on different trips. And so okay, like how much was travel? I mean, like travel in January could not have been affected by outrage over tariffs because there were no new tariffs in place then. By February, could there have been a little? Sure, but I want to see like July through December of this year, and we'll see what it shows. It may show a continuation of not really too much change. It may show, hey, there's an inflection point where things have started to slow down. I don't know what we're going to see, but including a period in this data where no tariffs were in place,
it's not relevant.
Doesn't really tell you anything about the data.
If you happen to run an Airbnb or know somebody that runs a hotel, we've heard from other sources that especially non-city hotel bookings have been down across the New England region. But if you have some firsthand experience with this decline in tourism demand, maybe it's down the Cape, maybe it's up in Portland or anywhere that is a popular destination for foreigners to visit, you can text the show at 617-362-1385 with what you have been seeing. Again, that's 617-362-1385 is the text line for the show.
Piece of the New York Times. As we get towards lunch, I always look for food items to torture myself. Can Gen Z's nostalgia save chain restaurants? And what it's talking about is all these kids. Remember, Gen Z, they're the new millennials. They're the new 20-year-olds. Millennials are older now, and they're all balding and starting to, kind of hit that time period where we're not all looking so hot anymore. Speak for yourself, Mike.
Yeah.
And in any case, Gen Z, they are the 20-year-olds, and it's talking about, hey, like, did these people have fun going to these chain restaurants with their parents? And when we say chain, we're not talking about fast food chains, but much more your sit-down chain restaurants, your Chili's, your Red Robin, your Longhorn, Outback, Olive Garden, Cracker Barrel, Red Lobster, Fridays, things like that.
And so is the question, is Gen Z going to rescue these brands?
The answer is no.
I don't think so.
I'm going to put that out there. And I say this as some of my fondest memories in like college was taking like the meager amount of cash that we had and going to Applebee's like twice a year and just, having a grand old time. Would it be fun for me to do that again today once? Sure, I think it would be a blast. I got a college reunion coming up this summer. Could we hit up the old Applebee's? Honestly, probably not. Have better things to do. But like, could it be something that I do like once? Sure. But the places that I continue to go to, whether chain or not, are places where I think I get something on an extended basis from it. Case in point, my deep, unending love and affection for all things Taco Bell. It's not because I view Taco Bell as something that'll make me look better. It won't even make me feel better. It'll make me feel worse at the time. But I enjoy it quite a bit, and my wife does too, and we have a grand old time going to Taco Bell and eating all like the taco stuff that we can there.
So, I mean, look, nostalgia can work as a theme. The Ground Round just opened a new restaurant out in
Shrewsbury?
Shrewsbury, was it? Okay. I don't remember exactly where it was. I think that can work, but when you look at, hey, what's driving companies to do well or poorly in the restaurant industry, it's usually not playing on what they thought was really cool 20 years ago. It's delivering some sort of value proposition. It's delivering something new and exciting that people want to go visit. And plenty of these restaurants, by the way, I don't remember, did we cover TGI Fridays or was it Applebee's recently that has been
Applebee's
having a ton of success by just saying, hey, our prices are about the same as going to a fast food restaurant, and we'll give you a waiter, a full bar.
Chili's
and
has been killing it.
Yeah, it was Chili's. That's who
Chili's
it was.
is killing it with that burger deal.
So my answer is also,
what are you going to give me? That's going to be, if you provide good value and a good experience, people will come back. Nostalgia gets you in the door once. It doesn't make you come back.
That said, I'm now picturing,
especially if the experience isn't as good as you remember.
Yeah.
And let's be honest, it almost never is, because you block out all the bad stuff that used to happen. We've all seen the episode of Mad Men where he talks about nostalgia. And I'm not going to go be John Hamm because he's much taller than me and better looking, but nostalgia's a thing. But you fade out all the stuff that's not as good at the time.
It's a good point. I think you might do it once, and then if there's nothing but nostalgia, you're not going to keep going back.
Right, exactly. That's
kind of sad.
It leaves you feeling kind of emptier, actually. You're like, now what? Okay, I've done that. Great.
Yeah.
Now, if you go back to, Applebee's and you're like, wow, this was amazing, okay, then you got something. So nostalgia will get you in the door. I don't think it saves your business, because if your business were that good to begin with, you wouldn't need to rely on nostalgia to get people back. How's that?
I'm going to go eat lunch.
Sounds great. Markets are mixed. We're done for the day. Back at it tomorrow. We'll see you then.